Kia ora koutou. Welcome everyone to this panel discussion on the Aotearoa New Zealand Stewardship Code. As the representative CFA board member on the panel, it's my pleasure to introduce my fellow panel members, each of whom are also members of the Stewardship Code Development Committee. Firstly, our moderator, Erica Miles, who is Responsible Investment and Corporate Sustainability Consultant. Sue Walker, who's a Senior Manager of Sustainable Finance and Responsible Investing at the BNZ, and also a CFA Charter holder. And finally, just to introduce myself, Philip Houghton-Brown, I lead the Investment Solutions team at BT Westpac. So I'll now hand over to Erica to start the session.
Kia ora. Thanks, Phil. Thanks everyone for coming today. Great to see you. So in terms of the session today, we're going to unpack a little bit about what exactly stewardship is, and we're going to run through how the Stewardship Code, which is New Zealand's inaugural code, was developed. We're going to give you a brief introduction as to what the code entails, and sort of challenge each other as to what the opportunities and challenges are as the Stewardship Code embeds itself in New Zealand. And then we'll look at the next steps and the governance and oversight of the code, and where you can go to get help should you want to be a would-be signatory. For the session, it is an interactive session, so please do put the questions in the Q&A function in the Zoom, and we will answer the questions throughout the session. So thanks again for coming. So I think what we'll start with, Sue, if we could just explain in really plain English terms what is meant by investment stewardship. And if you could help with that, that would be fabulous.
Thanks, Erica, and kia ora, everyone. Yes, definitely. So I see stewardship as such a fundamental part of the investment process. And I mean, after all, investment managers and asset owners are stewards of their clients and beneficiaries' assets. And I think it's a term that covers a number of activities that support the risk management and identification of opportunities across those portfolios. So it can be, a bit more obvious with the use of proxy votes, but also I think the one-on-one engagement with their investee companies and issuers. And then also, I think it includes advocating for system change through engaging with policymakers or data providers or other stakeholders that they may need to engage with. And I think the other thing that is obviously happening over the last or more recent years is that there's an increasing expectation from regulators, clients and beneficiaries that investors are considering the real world outcomes of the investments that they make, and that's requiring them to include environmental, social and governance aspects in their investment decisions and their stewardship activities. So when we went through developing the code, I think, thinking about all those things, the definition that we came up with for stewardship in the investment realm was the responsible allocation and management of capital by investors to create and preserve long-term value for current and future generations, which I think sums it up really nicely.
Great, thanks, Sue. So Philip, what do you think? New Zealand's quite a small market, and so why do you think stewardship and a stewardship code itself is so important for Aotearoa New Zealand?
Yeah, look, I think it's important for a number of reasons, some of which should be apparent in the description that Sue has just given us for what stewardship is, and I believe that the code itself provides a framework to help make stewardship actually develop, across the whole investment industry. So the broad context is that there has been a maturing of responsible investment approaches in New Zealand. And while the biggest focus of the industry for some time has been on exclusions, which are about what isn't owned, stewardship provides an important complement in that it's generally about the assets which are owned. So, while most fund managers have been engaging with companies and voting for many years, I think that a code would sort of help and guide signatories who are looking to further develop their or initiate or develop their stewardship activities and become more transparent. And a recent review of the UK Stewardship Code found that that had been the case, since the code was enhanced. So I think it would also help the industry think about stewardship more broadly, including the asset owner, asset manager relationship, and across all asset classes. And finally, I believe that effective stewardship would be a way to demonstrate added value for money for clients and beneficiaries. So if you can demonstrate a strong focus on sustainability and stewardship to create and preserve long-term value, then I think that would be appealing for a lot of New Zealanders. So just to help illustrate what reporting on stewardship can look like, I'm going to show excerpts from the stewardship reports of two large global asset managers, one for engagement and one for voting. So firstly, engagement. So this picture is from Legal and General Investment Management's active ownership report. It shows the themes on which the firm has engaged with companies on and across each of the broad E, S and G categories. So you can see there's quite a wide range of areas that they have focused on. And then secondly, from Northern Trust Asset Management's stewardship report, a snapshot of voting topics. So if we just, thanks. So you can see there, for example, they've shown the percentage of votes supporting diversity, equity and inclusion, the percentage voting against board candidates and the percentage against management. So, both of those examples are simple quantitative measures, which are part of much more comprehensive stewardship reports, which also go into more detail about, the engagement with individual companies. So, while these are quantitative, a key objective of the code is to develop the quality of stewardship and the outcomes. Just also worth noting, these are very weighty sort of reports, a lot of detail. They're produced by big firms with many more people than is often available in the New Zealand context. So, it's unlikely that reporting is going to start off anything like that, but it sort of gives an idea of, what global best practice looks like if you look into those reports which are available online.
Great, thanks, Philip. I can see some people, because I'm actually sharing my screen, I can see some people raising their hands. So what would be super helpful is if you could put any comments or questions through the chat the Q&A function, which is operating, and I can see that. So thanks for that. Apologies, I can't multitask. Sue, just in terms of giving a bit of context and background, I think one of the really critical strengths of the code is in how it was developed. So just wondering if you wanted to run through for everybody a bit of background about how the code was developed and where it's come from.
Sure. Yeah, so we had a group of very dedicated individuals, and you can see some of the entities or businesses up on screen. And we were very keen to establish a really unique code and one that developed a code that was fit for purpose for the New Zealand environment. And I think both from a market perspective, size of the market, and then our cultural perspective, we gave up many Friday afternoons discussing and debating. We also undertook two extensive rounds of consultation, and then went one step further and sought assistance from some industry leaders, to help develop the code or create the actual core of the code. And they were literally putting pen to paper and supporting us, which was been fantastic. So I think that it's fair to say that the strength of this code lies in that it's been developed by industry for industry, and it was a very diverse team of individuals, which, is always a great thing when you're developing things like this, to bring different perspectives and really, challenge each other on getting it right. And so I think, that sort of real world experience, their capability and diversity really gave it its practical strength and the unique New Zealand flavour. I think it's probably worth mentioning that Chapman Tripp also did a review as part of this work against, the legal requirements that investors are already under in New Zealand, and probably the industry principles that a lot of us have signed up to. And I think, probably the main thing from that is that the code had little overlap with, what has already been addressed by existing in law. So, there was not much that really dealt to stewardship expectations in existing law. But I think probably what was also nice is that there was, some good overlap, in some of the principles, like the principles for responsible investment and RIA accreditation and expectations, that they obviously both have engagement requirements, and this code really supports those. So it was a good committee to be involved in. And so, I think probably to go back to, now I'm going to ask you a question, Erica, to go back to that uniqueness, as we develop the code, it would be really good to probably talk about, what the unique features of the Aotearoa New Zealand Stewardship Code are.
Yeah, thanks, Sue. It was a great committee. I must say, I confess I do enjoy having my Friday afternoon.
Me too.
Well, relatively free. It did take a reasonable chunk of effort to get to where we got to, so it's all good. Yeah. All right. In terms of the code, the code is principles based, so it's not prescriptive, and so therefore it can be right sized for different organisations of different styles, and Philip's going to go through who the code can and can't apply to. It is on a comply or explain basis, so if you are becoming a signatory to the code, you need to comply with the clauses in the code, or you need to provide a really robust reason as to why you're not yet complying with it. As Sue mentioned, we have based it on existing international codes. We drew insight from the UK Stewardship Code, and then also from Australia, the ASIC Code, and the Singapore inaugural Stewardship Code as well. So we did draw upon that. We did do wide-reaching consultation, as Sue mentioned, and we did get regulatory support from the FMA, and then Chapman Tripp also went through the code with a fine-tooth comb, and also did that legislative gap analysis to check that there's nothing in the code that would contradict existing legislative requirements. But I think the more interesting aspect is that we did incorporate the cultural context into the code. So the reason this is sort of the landmark landscape of stewardship code in New Zealand, and traditional codes focus on the centre box there, which is the investor governance through to corporate governance, the two blue shaded boxes in the middle, and then the stewardship in terms of the fiduciary duties towards clients and beneficiaries. But for New Zealand, we incorporated a really long-term value creation focus on the left-hand side of that figure. So recognising that to have sustainable outcomes in terms of investment preferences, outcomes for clients and beneficiaries, you need to also have sustainable outcomes for our environment and our society and our economy. And it's deliberately in that order to integrate Te Ao Māori concepts into the code. We also had a really strong focus on sustainable outcomes at the bottom left-hand side there. So a lot of stewardship codes focus on the relationship between the asset manager and the investee, but our code is broader in scope, that it also encourages the sustainable outcomes from investees for our environment and our society and our economy. And then lastly, the other aspect that we have in the code, which is not explicit as much in overseas codes, is on the right hand side there, which is the stewardship for policymakers and advocacy. So that engagement, collaboration and advocacy aspects. And in fact, when we went out for the first round of consultation, one of the most popular endorsed principles was indeed the collaboration principle, and that definitely plugs a few gaps at the moment. So that's our landscape for investment stewardship within Aotearoa New Zealand, and it also incorporates the Te Ao Māori piece in the fact that we have not defined value in financial terms. We've defined it we've left it broad so that signatories can choose or decide what value is. So value can be environmental, societal and economic value. And then we have a really strong emphasis, as Philip and Sue's already mentioned, about making sure that we focus on value for current and future generations. So trying to drive that long-term thinking. So without further ado, I'll Sue, just wondering, now I've got a sort of an overview of the stewardship and the multiple opportunities that exist for stewardship in New Zealand. Just wondering if you would be so kind as to go through the 9 principles of the code just at a high level.
Sure. Okay, so as Erica said, we've got 9 principles in the code. Just a brief explanation. So the first one, be committed, which is really about incorporating into philosophy, governance, and your practices, and your resourcing, that you incorporate stewardship into all of those things. The second one, establish and maintain policies. I think that's pretty self-explanatory, that you have a stewardship or engagement policy, and which is measurable and effective. The third one, which is probably one of my favourites, is incorporate material ESG matters into the decision, and that's about incorporating it into the investment decisions and stewardship practices. And I think what, and it's probably been talked about a little bit already, but starts to come through here, is about the importance of reporting on the outcomes of those, incorporating those matters. So when you're engaging with your investor companies, that it's not just about the fact that you have engaged, but what are the outcomes from those engagements. And that, as Erica has mentioned, also incorporates considering stewardship from a Te Ao Māori worldview. So, and then be engaged, which is about engaging regulatory and effectively with underlying asset managers, issuers and other key stakeholders. Vote responsibly, so exercise your rights and your voting rights in accordance with your investment mandates. So the next one, we're up to principle 6, manage conflicts of interest. I think, again, that one is probably pretty self-explanatory, but that you're putting the best interest of your clients and beneficiaries first, and explain your approach to managing any of those conflicts of interest. Principle 7, so collaborate and advocate for change, which already touched on to a certain extent, that you'll amplify our, investors will amplify the influence on ESG matters across, policymakers, regulators, index providers and standard setters. Then principle 8, measure and report. And again, this is you'll regularly measure and report publicly report on your stewardship and the actions that you've taken around engagement. And again, I think the importance of discussing the outcomes and I guess the escalation, if any, that there may have been around those engagement processes. And then lastly, educate and improve. So improve awareness around stewardship, improve internal capabilities, and provide resources to deliver impactful stewardship.
Great, thanks, Sue. I think a lot of where we get asked a lot of questions about which of those 9 principles was the most hotly contested, hotly debated, and to put you all over your misery, it was definitely the incorporate material ESG matters, because in overseas codes it doesn't get as much prominence as it does in our code, and we've given it, elevated it to its own principle to consider the fact that we have the need to look after the economy after we've looked after the environment and then the society. So yeah, that was definitely subject to many Friday afternoon and indeed Sunday morning discussions, that one. So Philip, it's great to look at these 9 principles, but who's it actually going to apply to, and can it be right-sized for all different sizes and flavours of financial actors?
Yeah, so signatories to the code are expected to be from 3 broad groups of investors. Firstly, asset owners, which includes workplace savings and superannuation schemes, foundations and endowments, iwi, family offices, community trusts, local government funds, Crown financial institutions. There's a wide range of asset owners. Asset managers, of course, so managers of managed investment schemes such as KiwiSaver providers, as well as managers of wholesale schemes. And then thirdly, providers of discretionary investment management services, known as DIMS. And so that's the wealth managers whose clients have given them the discretion to make investment decisions on their behalf, noting that other wealth managers providing advisory services could also choose to opt into the code. The code can be applied in both public and private markets. Given the makeup of the industry here in NZ, it's likely the majority of signatories will be investors in public markets, but certainly investors in private markets are certainly are encouraged to become signatories as well. It's expected that the code can be applied for all asset classes where possible, as well as both active and passive management. And as it's common for asset owners to delegate certain investment decisions to asset managers, it's expected that they would in part exercise their stewardship responsibilities by setting expectations for their delegated managers in those situations. So while the code doesn't directly apply to service providers, obviously they really have key roles to play in enabling signatories to exercise their responsibilities, and they could also choose to become signatories as well. So that's sort of in the provision of ESG research, training, consulting, and those sort of areas. That's when we're talking about service providers.
What's your view, Philip, on potential inclusion of those service providers as the code evolves in New Zealand?
Yeah, look, I mean, I think we just, for the first iteration, we felt it was important to, just kind of keep it, I guess, as sort of simple and straightforward as possible to the investing side. But I think over time, there is potential for the code to apply to the service providers as well. But I think that that's something that the industry would look at in sort of future reviews, and based on feedback from those providers as well.
Yeah. So thinking of the evolution of the code and stewardship more broadly, what do you see as sort of some key enablers and that we need to put in place for adopting the code?
Yeah, sure. I mean, I think, as mentioned, we did some quite extensive consultation. I have to say that in the most part, it was very positive feedback about implementing the code, and there weren't any real significant challenges raised by those that we spoke to. I think probably the only call out is that, you know, there were some concerns about resourcing, especially within some of the smaller managers or organisations, of you know, something else to focus on. So, you know, to support that, we've given signatories 2 years to implement the code within their organisation and provide their first report, and also, you know, the support of the founding signatories and guidance by the Secretariat around that to help them with that process. I think, you know, see the code, you know, as providing some good guardrails and, you know, framing around their stewardship activities, and, you know, that transparency, and, you know, it certainly will bring us in line with overseas codes, as you've spoken to, but you know, and it certainly allows investors to meet all the you know, the 3 goals of effective stewardship. So I think, you know, as it was overwhelmingly positive, it's probably now it sits with industry to take the code forward with our, you know, with the support of the founding signatories. But yes.
Yeah. Philip, do you have anything to add to that in terms of the potential barriers or and/or key enablers on the taking the code forward?
Look, yeah, I mean, I think it's really the sort of as Sue's touched on, you know, the resourcing and other commitments that are going on right now, and you know, I think you know, this perhaps where the service providers come in a way to sort of, in terms of assisting, you know, through the proxy advice, the data, and being able to sort of assimilate all of the information and put it into a report, but also the training, so, you know, to help people's understanding, you know, particularly in, you know, organisations where there aren't specialists in this area. So, yeah, that's probably a challenge.
Yeah. Okay. Yeah, so just on the better journey for our journey towards better stewardship, we started off on the left-hand side there in terms of consultation, and there was a lot of work done this year to raise awareness and industry buy-in and agreement of the need for a stewardship code, and the Code Development Committee was established, and Philip and Sue and I were all on that committee. And then we've set the principles, the Stewardship Code on a comply or explain basis. And now we're moving into the foundations, which is the third sort of ladder that we're looking at, which is looking at the code founding signatories in the Code Governance Committee, moving towards signatories disclosing their stewardship reports on the disclosed register, and that will be again on a comply or explain basis. We, as Sue mentioned, we did put in a 2-year caveat for signatories or founding signatories to adopt the requirements of the code. And then it is envisaged that with time and adoption, that the principles will be deepened, and we have committed to reviewing and revising the code if it needs it in a few years' time, and looking at whether it extends to the next more mature approach, which is apply or explain. And also again the potential inclusion of service providers and supervisors and the data providers. So it is a journey, and we didn't want to go from 0 to hero. We wanted to go in a nice graduated way. So we've actually just got a question through here, guys. So it's from David. How would you respond to the criticism that the business of business is business, and that stewardship should therefore only be directed at maximising the returns of the firms which they are invested into?
I can, make a start. I guess the way I look at it, with, certainly with the consideration or integrating of environmental and social factors into the investment process or decision-making process. I definitely see that would, we'll be considering the long-term value of that investment. So, there are physical and transitional risks out there around climate, especially, which could affect the value of those investments. So I think that by considering those factors in stewardship and engagement, you are absolutely, considering the best outcome for your beneficiaries, and that will have some very definite financial implications over the long term. I think it becomes hard because a lot of those things are going to happen well into the future. We're not necessarily seeing the impact of those yet, but we especially a lot of asset owners need to think about long-term value from a business perspective.
Yeah, and I think, David, it also goes to the point that our current use of the current use of our environment, to convert that into economic capital, financial capital, is just not sustainable. So there's a really strong emphasis here on ensuring positive outcomes for our environment, our society and our economy, because without sustainable outcomes for the environment and our society, then you're going to end up with issues like climate change, which is a risk to financial stability. So that hence the reason they are deliberately put in that order. So yeah, any comments from you, Philip?
Yeah, I'd support those previous comments, and I think it, for a lot of investors, whether it's managers or asset owners, their stewardship is going to be a reflection of their particular beliefs, which is going to be reflected in their existing either investment beliefs or responsible investment policy or sustainable investment policy. So it's not that it's necessarily going to, they're going to be doing things that are contrary to the way they think at the moment. It's just really just about providing a framework to enable them to do that, and transparency to sort of demonstrate that they are actually doing what they said they were going to do. And it's just when you look at surveys of asset owners or just sort of through experience, you can see that this is an area where they might have some policies in place, but they're looking to develop them and increase them. And for a lot of investors, those beliefs that I mentioned at the beginning are also a reflection of what it is that their underlying investors want to see. Whether that's the community or KiwiSaver members, as reflected in surveys of the industry, that investors do want to see certain behaviours or that. So as I mentioned earlier on, it's sort of an extension of not just sort of excluding things to reflect those beliefs, but also engaging and driving change to reflect those views with the assets that you do own.
Yeah, correct. There's another question actually from Anonymous. Is there any empirical evidence of improved returns / lower market volatility where these codes have been in place for the medium to longer term? Who wants to have a go at that one? I can go if you guys won't want to.
You go first, Erica.
The short answer is, well, there's two answers. Yes, there is. If you go to the active ownership from the UNPRI, you'll find that there is some research that shows that there are improved returns as a result of stewardship. But I'd also just like to point out that stewardship is only one lever of a responsible investment approach and should not be viewed in isolation from other tools that investors have in their toolkit, such as ESG integration, stewardship, tilting, etc., etc. So it's not the only answer to investing responsibly. Sue or Philip, anything you want to add?
So I think, I mean, some of the codes are relatively recent. So, you know, obviously having long-term empirical evidence in some countries is just not going to be possible yet. But certainly, you know, I touched on briefly the terms of the actual increased transparency and improvement in practices. You know, for example, in the UK, the FRC review of the UK code, you know, just had a whole raft of examples from actual managers and asset owners, you know, which sort of demonstrated that the code was doing what it was set out to do, which was to, you know, to improve those practices and the increased transparency. But so that's not, you know, that's just like coming at it from a slightly different angle from the direct sort of empirical evidence on returns. But obviously there's a huge amount of empirical evidence in terms of ESG more broadly, as Erica mentioned.
Yeah, and there also was a review done of the effectiveness of stewardship codes in Asia Pacific, which was done by the CFA, and you'll find it on the code website. Just got a question here from Shane, which lies really neatly into the next question. In terms of founding signatories, the code has a website and it has an email address, and on the website you will find all the details at what it takes to be a founding signatory and to be a signatory as a whole. The deadline for founding signatories closes 3 months after the code was released, so it closes on the 28th of December. But you'll be pleased to know, Shane, that Harbour is already a founding signatory of the code. But for those of you who are wanting to look at signatory status and indeed if founding signatory status, please go to the website, and there's also a webinar on run by the Secretariat on Friday at lunchtime, and that will unpack a little bit more about what is on the path and what support is available for signatories over the next 2-year period. So hopefully that answers your question, Shane. So yes, Harbour was delighted to be an early signatory. Yes, thank you. It was great. It was actually great. Harbour was involved in the development of the code as well. So thumbs up to George on that one. And then the next question from Shane is there evidence showing that stewardship codes lift trust in capital markets? So Philip, do you want to have a go at that one?
So, I mean, my answer would be yes, essentially through that consistency, I guess, of you know, being able to you know, demonstrate that investors are actually doing what they say they're doing. You know, so that their policies are reflected in the reporting activities, and obviously, as I mentioned, it's important that that's not just about how many letters did we send out to companies, or how many meetings we had, but also over time, sort of expanding on the qualitative outcomes. I mean, I think it's also worth noting that investors are obviously very keen to see governance codes or handbooks for issuers, for corporate issuers and other issuers. So corporate governance handbooks and that sort of thing. But it's sort of like saying, we expect this of the companies that we're investing in, but we don't have anything for ourselves to sort of as a sort of like a sister document. So I think in terms of sort of completing that, or not completing it, but sort of broadening out that sort of degree of trust, I think it's useful to look at it from that perspective as well.
Mm-hmm. Yeah, I think the transparency aspect of the Stewardship Code, and as Sue outlined those last two principles around reporting and disclosure, transparency does make the best form of disinfectant. So just having that transparency, I think, does definitely lead to trust. Question here from John Berry. Apologies if you've mentioned already, but does the code relate to the PRI in the UN SDGs? The answer to does the code connect and relate to the PRI? Absolutely it does. There's a great big mapping exercise that we did, John, which shows what the PRI requirements are, and indeed what the RIA certification requirements are, and the requirements on stewardship. And they do connect and relate, and indeed for people who are signatories to the PRI, then absolutely you're going to find that the New Zealand Stewardship Code aligns very nicely. And the next one, John, your question was around the UN SDGs. The UN SDGs are a little bit separate to the concept of stewardship. And indeed for the SDGs, it would be what an investor wants to achieve in regards to positive outcomes for environment, society and economy. So you could dovetail SDGs into your stewardship purpose and values quite easily. They, again, not contradictory to each other. So hopefully that's okay, John.
Yeah, you could certainly use them as topics to engage on the UN SDGs.
Correct. Yeah. Cool. So has anybody got any other questions or comments? Otherwise, we will sign off. Great questions, everyone. Yeah, so if you are interested in becoming a founding signatory, please do go to the Codes website, and you'll find there links to register. And if not, then you'll find the Secretariat will be able to help you. But all the information you need is indeed on the Codes website, and in the Codes website you'll also find links to quite a useful key terms and some key reference documents that we used to develop the code, and a little bit more about who was involved in the code and the consultation that happened as well. So it's great, one source of the truth. Yeah. Cool. Any other Q&A coming through? Otherwise, we'll hand over to you for closing remarks, Philip.
All right. Well, thanks very much to the panel, and thanks very much for everyone who attended. As Erica said, some great questions, and feel free to send any follow-up questions either through Kylie or to us directly, or to the Secretariat for the code. We look forward to this the signatories growing over time, and so yeah, I think that's all we have. So thanks again, and we will sign off now.